Greetings everyone, great to be on another episode, another show. And today I'm actually going to move further into one of my investments. Just FYI, this is not investment advice at all. I'm simply sharing with you what I am doing. You must do your own research, you must take your own professional advice, and do not consider anything I say today or ever as advice. Thank you. Before we get into it, I'd also like to take a couple of seconds to, I'm a bit speechless actually, but yeah, the earthquake in Turkey and Syria. I'm sure all of you have seen the pictures. We're very sad. Hearts go out to all of them. Yeah, the best I can do personally, I'm donating to various charities as much as I can. But obviously, thoughts with them all. Really terrible tragedy. Okay, so I'd like to introduce you to a new company that I've invested in, and it's based on the thematic, building on what I've said previously, battery metals, specifically the European Union, which is now gearing up to expand its electric vehicle production and also wants to move further into the value chain in terms of manufacturing batteries, in terms of the natural resources. So the company I'd like to talk about today is called European Metals Holding. It's listed on London Stock Exchange, it's listed on Australian Stock Exchange, and it is a company that has access to what I understand to be the largest hard rock lithium resource in Europe. It's based in Czech Republic, it's called Sinevec, borders Germany, and if you actually, from their investor presentation, look at a map, it's kind of slap bang in the center of all these manufacturers, OEMs, and other companies looking to invest or already have invested in the EV supply chain. So the thing about European Metals Holding, it's not a company that's generating any revenue, it's not a company that's generating any profits. So it's at the higher risk end of the scale. However, the good news is it already has a resource. So the key efforts now are for the company to conduct its due diligence and ensure they have a plan to convert that resource into lithium carbonate. So in terms of the key factors that I see in this company, first of all, as I mentioned, it's got an estimated capacity to produce just under 30,000 tons of lithium carbonate per annum. That's for a mine life of 25 years, it's pretty significant. And a net present value, please Google the term if you haven't come across it. It's a way of valuing a project, which in turn can value a company. But the net present value in Australian dollars, I believe, is around $1.9 billion. And as a benchmark, the current market capitalization is just over 100 million Australian dollars. Current share price of 66 Australian cents, 41 pence in London. So if you just do a bit of raw benchmarking, there's a significant upside potential. However, just to caveat that, 51% of the mine is owned by the Czech utility, which again I think is a big benefit in terms of approvals and permitting and everything else. 49% belongs to a European Metal Holding, so literally half of the 1.9 billion is what the potential value of the company is. What is also interesting is that the company recently was listed onto the EU's list for obtaining support funding of around 49 million euros. Not confirmed, but been identified on the list, which again is very positive. Um, the European Union is moving at speed in the face of the US's IRA, in the face of support from other global players like China within its domestic industry, and really wants to make sure that it has a domestic industry in the EU. Hence, you can see that things are lining up very nicely. So far, so good. The company has produced a pretty compelling process flow sheet. It's optimizing cost of production in its studies. So far, we're at the PFS stage, so pre-feasibility study, and also it's taking its ESG credentials quite seriously. If you read its reports, okay, please do your research. A broker called Euros Hartley, it's on their website, recently made a visit to the location at the beginning of this year, end of last year, I think. Analyzed the site and did a re-review of its analysis, and it's currently got an Australian dollar target of 2.41 compared to 0.66 now. That's I would say a medium-term type of target. The longer-term target, you can take the NPV versus market cap. That's my view. What is my strategy here? So I'm a long-term investor. For something like this, for me, it's a 3-year horizon. I will be looking for catalysts along the way. So I am looking for step-by-step or stepwise growth in share price, reflecting increased value. The 2 key catalysts this company needs. One is the production of an up-to-date definitive feasibility study. Now, its definitive feasibility study updates all of the design and cost factors in detail and is considered the basis to be able to then go to banks for finance. So bankability. Sometimes these are called bankability feasibility studies, but DFS is fine. The other catalyst is to offtake agreements. So these 2 things are what we're looking out for this year. If this company can achieve the DFS and announce at least potential offtake MOU signings and later on binding agreements, then I would say this company is due for a re-rate. Given the criticality of this industry to Europe, given the location of this resource, given the support that it's already getting, given the value there, given the size of the resource, etc., and the work that has all been done to date, I think it's well worthy of an investment from my side. So I have done that. This is one we'll track, we'll watch the lithium market. Some other interesting factors. Let's look at the risks. So risks are obviously to do with financing, risks are to do with permitting, risks maybe upon its updated DFS, it may come back with something that's not particularly great. And these are risks that we need to really watch out for. I'm also quite encouraged by the fact that the study is based upon a long-term lithium carbonate price of $17,500 a ton versus around 70,000 that we currently see. That's expected to be there for the next couple of years. So I would say the preliminary economics, current economics have been based on lower long-term figures compared to what we have. So that's quite realistic. And let's see where all of that takes us. So once again, I've been slowly building step by step on an approach to key investments for the energy transition, and here's one of the first ones that I'm alerting to you all here. One that I've invested in. I've got skin in the game, and I'll be tracking this, and I hope that in the coming 6 to 12 months, we see some nice re-rates. You may ask, okay, well, how much do you think are you looking to make? What sort of return? Well, okay, let's break it down. Medium term, I'd like to see this re-rate um, 3 to 4 times compared to what it is now. And longer term, as it gets to kind of demonstration phase and beyond, I would like to see that get to, let's say, 2/3 of the potential NPV, something like that. So, there's sort of up to times 9, maybe more, factor potentially by which this could revalue. And some institutional investors have taken note. If you look at over the last 6 months, the stakes taken by institutional investors, that's always a great sign, by the way. So with that, please analyze the website. All the reports are there. There are investor presentations, the broker research and analysis. There's lots of stuff on the web. There are interviews with the chairman. I always watch all of these things. But given all of the thematics, given the resource, given where the company is, reasonably positive cash balance, so I don't see a risk of raising more funds and diluting shareholder ownership in the near future. So with that, let's see what happens. Thank you for watching. I really hope you find this useful, and I really am doing this to share some of the investments I'm doing and with everyone. And as I said, this is not advice, but I do hope you benefit from this video. Cheers, thank you very much, and see you again next time. Take care, bye.